Hello guys, I want to welcome you to this YouTube channel. And in today's video, I'll be teaching you about the one strategy for life. This strategy is very suitable for traders that are trend followers or a trader that is struggling to have his own trading strategy, right? If you have been looking for a working system or a working strategy that you can rinse and repeat over and over, then this is definitely for you. And now let's get into it. For this particular strategy to work, you have, or you need rather, some certain knowledge or basic knowledge for you to apply. First, you must know about the trend and market structure. So in market structure, we know that a trend continues being bullish in this case, as long as the market keeps on creating new highs. But there's something else that we are going to require in this strategy. And that is, if you look at the structure right here, when we say higher highs and higher lows, everybody expects that the lows are being protected. And when I mean lows are being protected, it means we don't expect price to break the lows. So right here, we have our continuation, which is our BOS. And what do you see? You notice that price kept on respecting the lows. Price kept on respecting the lows. Now, in this particular strategy I'll be teaching you, the low we have here, now take note, there's something we call our external range liquidity, ERL, right? We have something called the external range liquidity. Let's use this, hold on. So over here, we have our external range liquidity here. The lows and the highs are where we have external range liquidity. So here we have external range liquidity at this low. We have external range liquidity here and the high as well. So the type of liquidity resting at those points are external range liquidities. So normally what we have been seeing is price always come from external. You see over here, price will come from external, it will come to internal, right? Price will come to internal right here, and from there it continues going high. You come again from external, it will come to internal. So any POY or anything that price respect inside there, that's the internal. Now, in any case at all, this particular strategy is now talking about when price actually comes for the external. So anytime you see price now going for the external range liquidity, which is in this case the low, okay, the low we have right here. So let's take this as a middle, as black. So anytime you see the market coming for the external range liquidity, and what do I mean? Anytime price trades to this particular low, let's assume we have a POY here that we have been anticipating to buy from, which is internal range liquidity as usual, which is like normal business as usual, right? Price coming from external to go to internal, and from internal to external. So right here, when you see price coming from external another time, you would expect price to come to internal, like internal POY. But anytime price actually trades to the external, most likely price coming with this kind of move. Something like this, bearish candle, and price did not respect the low. However, not still disrespecting it totally. What just happened there is that price traded below that external range liquidity. So anytime this kind of thing happens, it's a very, very good strategy that always makes price worse. Price always trades back to the high. So just go and pay attention to this. It doesn't happen often, but anytime price goes for your external range liquidity, which in this case, your old low, that thing you call your higher low, if price should ever get there, but having a liquidity hunt around there, which is this kind of move, this is what we call a liquidity hunt or a fake breakout, which means price can actually close below and immediately come back and close back above it, which is what we call the fake breakout. So when this kind of thing happens, now we have a strike. But the one I love the most is the one that does not close below. That is just a wick that just goes below that point. I love that one so much because that one is much more clear and safer to bet on than the other one. So right here, when you see price taking your external range liquidity, you are sure that price is definitely going to the high, which is the previous high. However, this is how to now enter, because obviously it's not just about knowing where price is going to. It is now about making money on the move to that direction. And this is when I'll be teaching you two entry models for this strategy. So anytime you see it, like it's a very simple model. All you need to just do is mark your structure. And like I said, it doesn't happen in all cases, right? But in any case at all, that price comes for your daily range low, that's your impulse low, that there's a rate of your impulse low, which is certain that price will go to your impulse high, then trust me, these are the two entry models you can apply for you to get your trade towards that target. The first one is the reclaimed block entry. Over here, there's another block here, which is the actual internal range one that we are expecting price to respect. So first thing is everybody expect price to come here and continue going high. Now we have price breaking below, doing a manipulation below. Now that same POY that was disrespected, that same order block that was not used, that same POY can now serve as a reclaimed block. Like price can come back, this is the manipulation, which is what we call the breakout, the fake breakout. Then price comes back inside the range and they can come back and retest that level to go high. So in this case, I can place my trade right at this point, right, and then place my stop loss below the initial manipulation. My TP will be the previous high. So this is by using what the reclaimed block entry. And this particular reclaimed entry model also applies when the reversal is like a V-shaped reversal like this. When we have this kind of straightforward price action to that your POI, that is when you can use something like this. Now compare that to this other side when the reversal or the retracement was in form of a structure. You can see price was doing lower, low, lower, low, lower. You will see there's a structure building up to that point, unlike this other one, right? So in this case as well, we are going to be using the factors here is the sponsored candle. That's what we're using for our entry. But what do we need to see? Let price take out the daily range low and then displace a high, like the previous high during that retracement. That displacement is what we call the market structure shifts. Then we can now enter from this other block right here. So this is a simple model that you can repeat for life. Okay, this particular strategy can be used for life. It doesn't appear often, right? But it's just like whenever it appears, it is surely one of these best strategies that has a very high win rate. Okay, and the models I'm also teaching you for the entry is also something that is what very constant. Okay, so with this particular model and this plan, you will get most of the setups entry. We have some setup that maybe you are using breaker, and you are using something that maybe fair value gap. Those ones are not really constant. For example, if you say it's fair value gap, you realize that most times price might not even get there, or price can break below your fair value gap. So, but this one is a very constant model. Apply it either the reclaimed block and also or the sponsored candle. But what is the main trigger? The main trigger here is there's a BOS and also there's a stop hunt at the range low. Those are the two things that formulate the setup. The final thing for you to now do is execute. And I've also given the plan of execution. So let's show an example of this model. This is an example of this model that was traded recently. What do you see here? We have price break. You see, it's an uptrend, right? This is price higher high, higher low, higher high, higher low, and the likes. Then what do you notice? The range low that we have here, right? Price traded back to that range low. And this was the stop hunt. Remember, what are the factors? Stop hunt being the first one, and we have the stop hunt. Second one is we now have a structure shift, right? So in the other one, whereby we have reclaimed block, that means when we have a clear order block, we are going to use that order block that was broken as a reclaimed entry block, right? But here there's no clear order block on this side. Price clearly just takes out the daily range low. This is our sell side liquidity that happens to be our external range liquidity, right? So then price takes it out, and of course there's a structure shift. The entry was taken from the sponsored candle, like the exact candle that was taking out liquidity, and of course the target was the previous high, and price delivered accordingly. Let's see another example. I'll show another example on USDPY. Let's take a look at USDPY as well. This model can be used over and over and over. Very beautiful model for entry. So let's go to the 4 hours time frame here on USDPY as well. And there's a particular place I've applied this model. Very, very beautiful trade. Very, very nice and beautiful trades. Now look at it. I'll use two areas over here. I'll use two, right? And first one is this. This is the first one right here. If you look at this particular thing also, it's the same thing we are talking about, right? When we have structuring, look at the structure here. Up, higher, low, higher, low, higher. So in this case also, what the price do? Price traded for the range low. Can you see that? Price went for the range low over here. And after doing the manipulation at that range low, what would you do? Right? What are the entry criteria here? Is this one is a sponsored candle or entry as well? Can you see? Price is breaking this high, breaking this particular immediate high as well. So that's our MSS. This is our MSS here. So the entry will be taken from the other block at that particular point, which is a sponsored candle. So if I take my entry from here now, take a look at this. From this sponsored candle right here, where is our TP? The TP is where the previous high. This is how beautiful it is. You are taking your TP at the previous high right here. And of course, no matter how long price you take, it's going to deliver. Because let's even leave the entry apart. The model itself is external range to external range. It's part of the one of the best algorithm delivery ever. If price takes the daily range low, like external range liquidity, which is the one in line with speedy arrays, price will definitely trade to the previous external range liquidity. Is a law that's already existing according to the price delivery algorithm. Our own is now how we can benefit, which is the entry with that law. And that is what I'm showing you accordingly over here. Okay. I'm showing you how to use this in terms of structure range. And let's go back and see another example. So this is an entry using that same exact model. Over here, even internally, look at this. Internally, we have a similar one here. And what we have internally here, we have a clear order block on we have a clear order block on this side. So let me show you the order block. Let me show you the order block. Let's go to 2 hours and see. You will clearly see the order block now. Very, very clear one. Because that was a clean block entry. So let's see if this is the clean block. Okay, this is very beautiful. Very, very beautiful. Okay, look at this. This is the order block that price we have over here. I'll use this particular level as my order block. Right? And of course, after price violated the order block, which is the range low, because you can see higher high, higher low, higher high. So price violated this particular point here. And okay, there was no reclaimed entry. Okay, like look at this. We do not have a reclaimed block entry here. So what do? This particular setup has no entry. You leave it. You can see other examples that have given us entry, but this one don't give us entry. So you leave it. Over here also, we have a similar thing. Higher high, higher low, and higher high. What the price do? Price took out the recent higher low. You can see this particular low is the one that created all this high. This low here is the one that created the high we have here. That's the previous high being broken. So that's our daily range low. Now, price has taken it out. What would you do? Of course, in this case, we had a breaker entry actually. So let's just say I've taught you 2 models out of the many models for entry that we can use with this particular strategy. Okay, so this one is the breaker inducement entry model. Breaker inducement. So it's more like this when we have higher high, higher low, higher high, higher low, higher high, and now price coming um to take out our so-called daily range low, make a tiny pullback here, going higher, then come back to the breaker block to now complete the cycle. So this is exactly what this other one is talking about. Okay, this is the rate of the daily range low right here. This is a breaker block also right here, and there was an inducement above it. So you can see this on that model for entry with this. But the point is, the target is what we are sure of. These ones are just entries towards that target. So the more you know about entry models, the more entry models you know, the more likely you can catch any opportunity towards that point, as long as you know that direction is already certain. Because in trading strategies, the first thing that you must be assured of is direction, which is why everybody talks about directional bias being the first thing. Once you are assured of direction, then your entry is secondary, is not the primary. The primary thing to do is determine direction. And the secondary thing to do is now use your entry models or strategies to trade towards that direction. And these are the things that ensure success in trading. Okay. So these are examples of my strategies. And I want you guys to go ahead and backtest more on this. This is a very simple and very, very crazy strategy that you can just trade only this one alone for life. And trust me, you are going to have tremendous profit and result with this because it's a simpler one. You don't really have to go ahead and cram everything you have left in Forex or anything. It's just a very simple and straightforward model. You don't really have to crack your brain. Which one should I use? Should I do this one? Should I do this one? Just go straight to the point and you are going to be assured of profits all over and over. So if you enjoyed this video, make sure you drop a like, make sure you drop a comment, and make sure you share it. Okay? I'll see you guys on the next one. I remain Poppy Joe FS. Thanks for watching.